to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello again, everyone. Happy Fed Day. It's pretty quiet morning here, getting ourselves ready for the fireworks later on today. Not really too active in the market. Mind you, I did do a couple transactions. Whatever it's worth. Dashboard members, we got a bit of a signal there, of course, on crypto, so I had to act accordingly. Don't really like talking about it in the free videos, but nonetheless, you can kind of see the breadth of the S&P 500 is threatening to roll over here. And you can also see that on the histogram, the crypto market had already rolled over. So I don't think it should surprise anybody that things look a little heavy here. One gentleman on the site likes to post Larry Williams. I didn't actually get to watch the whole thing, but I did hear sort of, tertiarily that he was kind of looking for the market to be a bit soft here through August and maybe early September. And also, too, we look at a number of sort of darlings in the market right now, and they're not really looking very happy. We are working our way through earnings season. So, once we're on the other side of that, and it hasn't been like an absolute stellar earnings season to say the least. But once we're through that, then we have to start thinking about, inflation issues and politics and all that kind of fun stuff going forward. So, I wonder if 2023 might be the year that people were kind of hoping that the market would go up, but it turns out that it's a big hurry up and cool your jets. And also, too, remember, everybody, maybe this might be an opportunity to just do a refresher because there isn't a lot new for us to talk about here. There are some individual names. Of course, you can see this is one I bought a while ago. That one sure is working nicely. So I did buy another uranium stock today just because I love uranium so much. But this is one that one of our site OGs, who actually is an active member in our secret options formula club, you can see I went and bought $500 worth of this thing for my registered account. And keep in mind, whenever I play these junior markets and junior stocks and warrants and options and stuff like that, I keep the bets very, very small. I am chicken shit by nature, so I'm never going to go bet the farm on any of this stuff. Please understand that. Anyway, back into reload zones. I think we had a bunch of bull divs and stuff come in here. Yeah, there's a bunch of bull divs in here. Had a nice little W come up here about a month or so ago. The market dipped back into that price level, so I went and bought some for my registered account. It's probably a little bit early, but I do like this natural gas uranium kind of angle. I did go and buy a whack of this UNG, the natural gas ETF, and if natural gas moves up, uranium's probably going to move up. It's all sort of a proxy on energy. So I actually did do something today, but this isn't really trading. This is, like I said, I'm just adding a stock to my portfolio that I kind of wanted to add. But one of our OGs on the site really likes this name, so I went and joined him on that. Of course, do your own due diligence. I'm never going to tell you what to buy and sell in the market. That's your money. If you want help on building your plan and understanding why Brian likes to do things like reload zones and bullish divergence, what the heck all these boxes down here mean, and then why Brian likes W's for entries, well, that's what our school is all about. So feel free to join. In fact, we got a new term coming up here in September. And actually, we have a raffle that we do fairly regularly. We're going to be restructuring the whole web page and the different ways to access the information. So this page itself is going to change. But maybe Chris, while it's still up and running, I guess I'll just PM you the link. We can always throw this in the description of the video today. And why am I telling you this? Because we have a raffle. And hell, I'd love to have all of you join the raffle and one of you actually get a free seat in the program. Uh, Talk about a win-win, eh? Actually, I'm still connected in a chat room on Discord, so I better end that. It's always funny when you look over there and go, hey, I'm still chatting in the day traders room. Where is Chris? There's Chris. Oh, and he says already in description. Well, you're awesome. So anyway, the point of the matter here is maybe pop on here, consider entering the raffle. And then, of course, if you win, awesome. But even if you don't win, I mean, the price of our level 1 program to just teach you how to build a trading plan and how to act responsibly with your money. I mean, for $1,000, that's ridiculous. But anyway, good value in my opinion. Trying to be the demonstrator of best practices. So every day, going through the routine. As you can see, did a little bit of business, and now it looks like Binance has officially told us to go away. So I had to do a little bit of hoop jumping, I guess, hurdle jumping this morning, and Stuart did a yeoman's job directing me in the right direction and making sure. So I'll basically continue doing this algo BTC trading plan, but I'm going to be doing it off of Kraken now versus Binance. So, long and short of it here, had to book a loss on this last trade. That's the way it goes. It's quite often the difference between robotic algorithmic traders and humans. A lot of times, I mean, the algo, the computer doesn't really care. They're just numbers to the computer. But a lot of times the humans can't handle having to book that loss, and they go, well, you know what? I'm just going to leave it a day or two. Maybe things will get better. And then all hell breaks loose, and then they throw in the towel and, oh, geez, well, this day trading stuff's garbage. So I had to book loss, but nonetheless, trying to act like a professional here for you guys. That's the way it goes. And as I sort of said there a few minutes ago, my routine here, it is a Fed day, so I didn't really want to do a hell of a lot in the market. You see Japan was basically flat on the day. I always suggest that you take a look at what Japan has done overnight. It's usually a pretty good barometer as to how our day is going to go, but I would imagine everybody right across the world, I suppose, is kind of just like, okay, what the hell's the Fed going to do here? Oh, buy the rumor, sell the news. So obviously today's broadcast is going to be dominated by the Fed. I don't think we'll do even that long of a video here today because what time do we fire up the Fed hangout, Chris? Yeah. Yeah, so that's about 11:30 on the Pacific, on the wet coast. Um, so we'll finish this summary video, but like I said, I don't think there's going to be a hell of a lot for me to talk about here with you guys today. Obviously, we're getting ready for the Fed, and we'll load up. We do a Fed video, and it's kind of fun experience. Actually, we get quite a few people who tune in. And we do up like a nice matrix of the market, and then overlay Jerry's little speech. And if anything I've said repeatedly, and I will say it over and over and over, I actually think it's not really in these central planners' best interest to do these speeches and to talk too much. I think the best in my career, been at this game 35 years, the best governors I found were Paul Volcker, and he basically just said, "Look at I'm here to quash inflation, so get used to it." It's just that simple. But a huge portion of my career, Alan Greenspan was was the head central banker down in the States. And actually, he did a very, very good job because he really didn't like to talk to the public. And he would often say, look, if you think you understand what I'm saying, then I'm being far too clear. Which I like that attitude because, frankly speaking, whether it be grandma, and grandma, she's a lifer, uh, um, a technocrat, I guess that's what you'd call it. Ben Bernanke, same thing. You all know what I think about university professors and market participants. And frankly speaking, the shit show that we're living in now with all this hyperinflation is a direct result of Ben Bernanke. But of course, when this all hits the fan and we all live in this absolute crap Vegas world where you go to the grocery store and prices are going through the roof and a single family home's over $1 million, is it because the home is really worth $1 million? No, it's because the currencies are worthless. Oh, thank you very much, Ben Bernanke. Where are you now? So all that crap. So actually, I think most of these, and no offense to Jerry, I think he got played like a cocksucking son of a bitch. But that's not going to help the algo very much. Sorry about that. Everybody going, come on, we're trying to boost the YouTube viewership, and you go and drop a bomb like that, Brian. God damn it. Anyway, I think he got played by all these MMT people and the banksters. This is the banksters' plan, the whole, great reset and all that nonsense. So, Jerry gets up there and acts all full of himself. Look at me, I'm a banker, and look how smart I am. And yeah, none of their economic forecasts have even been remotely accurate. And they got the inflation thing completely and utterly wrong. Or did they? And that's the worst part about it is I would almost prefer that they say very little and don't talk very much versus just outright blatantly lying to our faces. So it's either Jerry's really stupid and he got played like a little schoolgirl, or he's lying to our faces. I mean, which world would you prefer to live in? So as I said, I'm not really the biggest fan of these Fed guys talking so much. Maybe over the years they'll learn why Alan Greenspan was so adamant about not talking very much. Anyway, that's here nor there. So there's your sort of backdrop of what the hell's happening today. Some of the sort of backdrop of backdrops, if you will. The data coming out today still points to a sort of softer economic condition, I guess. The rising interest rates have definitely calmed let's say, the buyer appetite in the marketplace. So things like new home sales, brand new home sales, that makes sense. That if all of a sudden the cost to actually buy a new home, a la the monthly payment, because nobody buys a house outright. How can you? Who's got $1 million just lying around to plunk into an asset? So because of the substantially rising cost to carry these mortgages, the new home sales markets are softer. The only problem, of course, here is that, half of this issue is quote unquote inflation. What is inflation? That's another conversation for another day. But if anything, these central planners don't really like prices to be rising as fast as they have been. You're probably never going to hear the banksters advocate deflation because that kills their business model. How can you charge people interest on loans, which is their profit margin, if we're living in a deflationary environment? Ironically enough, you might actually have the activity of the economy just come to an absolute grinding halt. And it was actually interesting. We had on the Afterparty yesterday with Sjord. We talked actually at length about this, and I was sharing with the community an interesting graphic. Prices are going to probably stay elevated like this because, like I said, the banksters and the Rothschilds and the, what's that jerks over in Europe, Klaus, whatever the fuck his name is. and all those guys. I mean, they don't want deflation. Deflation kills them. So, but what they do want is they just want things to go soft. So, what's happened with the interest rate increase, and I really like this gentleman. I think he's got a good attitude, good head on his shoulders. I'll give him just a quick plug here. I don't know, I have no interest in how well he does, but I like this guy. I think he speaks very clearly, and of course, he's a much better YouTuber than I am. It would be hilarious if I ever got one of these things. I don't think that. I mean, look at it. We got like what 17 people watching this video. Anyway, point here is, we shared a really interesting image, which I think completely perfectly explains this economy right now. So this is home sales in America, and of course, the United States is the world's economic engine. So the rest of the world should follow along suit with this. And you can see things were going great guns. And coming out of here was the little health crisis blip. And then, of course, they just threw buckets of money at the market. And, Druckenmiller's going, what the hell are you doing? You're screwing up our whole society. And then they kind of went, oh, yeah, maybe all this money printing is maybe inflationary. And then they got some religion. They started, cutting back on the money printing. And unfortunately, we live in a world that's just all based on credit. I mean, I think the statistic is something like 80-90% of the population would be absolutely dead if they got handed a bill of like more than $500 that they had to pay right away. But anyway, point here is these are home sales in America, and you can see they're actually now going negative. All right, so we haven't seen this dip in home buying, and really what I would even say is a lack of home buying since right in that crisis when everybody was freaking out, which only lasted very briefly. But really, back in the sort of U.S. housing crisis and all that kind of environment, that's basically where we are now. It's the same economy, which is shocking, right? Because it was in here, of course, that the housing market collapsed. So I guess the point I'm trying to make here is we're in a situation now where I think roughly about half of the homeowners in the United States of America either carry no mortgage or locked in a very low interest rate, long-term mortgage, 20, 30 years if they were lucky, at a very, very low rate. And they have absolutely no interest in either moving or selling or touching that low mortgage. So it's not really like there's a dearth of sellers. There's just no buyers, none whatsoever. And I think that actually clearly articulates the direction our society is going in. As they're contracting the money supply and raising interest rates, the whole world, the U.S. economy in particular, because it's the economic engine, and this is where it's being driven from the Fed and the world hegemony and all that nonsense. But I think that the whole world economy is just basically going to come to a grinding halt here, which is scary. We say that the Fed will keep raising interest rates until something breaks. And I don't actually necessarily think it's the US that's going to break because, like I said, more than half of the homeowners in the United States either have no mortgage or have that very, very, very low mortgage. So it's not really like it's not the same as here, where a huge majority of the population got sucked into that lost another loan to die tech nonsense through George Bush Jr. and that sort of bling bling. Everybody remember they were driving their Escalades and all that kind of crap where everybody was like literally taking out a loan and they all got screwed when the banksters screwed them, which is pretty typical. Banksters screwing, but like I said, less than half of the homeowners in the United States actually have a concern here. Yeah, it's not the case in a country like my country. Oh boy, I'd be very curious to see what the statistics are in Canada right now. I do sit and watch these guys. This guy's an American, he's talking about the US market. I do sit and watch some of these Canadians going on about the Canadian real estate market. And oh boy, when you listen to them, there's this one guy. I mean, it's just hilarious to listen to him. He's basically just saying that Canada is just about to head off a cliff here. And every single day it's the same thing. And of course, all the people that are watching his videos, and we don't know where the history is. This guy, I mean, I like listening to these guys. I think they got a pretty good head on their shoulders. Let's see if I can find this guy. And he's Canadian, so he speaks to the Canadian. So there's this guy, he's a real estate agent in Toronto. And actually that's the one career path you do not want to take right now. Is they are saying people, it's just an absolute bloodbath being a Canadian real estate broker now. Because, like I showed you, the same statistics are in Canada. No, the number of transactions is just falling right off the cliff. Of course, Canadians just raised interest rates again. So these guys are just dying 1,000 deaths. Like in Toronto, this guy was saying that just in the past, I don't know, 2 or 3 months, like literally the house prices are falling at hundreds of thousands of dollars. But that's what happens when you build a bubble like this. Unfortunately, the other side of it, it can just be just staggering the price drops that you see. But yeah, we're almost running out of time here. Yeah. So this guy here, I like watching him. He's kind of fun if you want to get sort of I don't think he has any skin in the game, but he keeps talking about the conflict of interest of the Canadian government and the way that they're basically the Canadian. I mean, you think it was bad in the States, the way the US government and George Bush Jr. and all those cronies propped up the US housing market. That is nothing in comparison to the I mean, you got to, I mean, this is borderline criminal. But because they're government, they make the rules as they go. So what's technically criminal? But the sort of very gray line between the US housing industry and these bankster elites and all that crap, and the oligarchs and the Canadian government. Like we have an agency in Canada called CMHC, and he's going on and on and on about, the it's a really fine line between moral hazard and conflict of interest and what's going on. And unfortunately, the people that are in charge of governments from country to country to country, they think that they are on top of the pile. But the issue here is that Canada itself only represents about 3% of the world's equity market. So, if the United States, being the world economic engine, is hell bent on raising rates, then Canada has no choice. It has to raise rates. It's not really like even the local economics dictate policy. They've just got to follow along what Jerry and the Americans are doing. So, I've gone on and on and on. But if you want a refreshing sort of different perspective, this guy is he's a fun guy to listen to about the Canadian market. And it's just a train wreck here in this country. It's just, oh goodness. And the interesting thing is that Canada never did have a recession through that 2008 crisis. There never was supposed to be any quantitative easing in Canada. They did it anyways. That's why we have these $1 million houses and our currency is worthless, because these stupid idiot government bureaucrats just went and printed so much money that the currency is basically worthless. So anyway, if you want some fun after listening to Brian, go listen to this guy about the Canadian real estate market. And this guy's kind of fun. Well, I don't know where that guy went. Anyway, the last video I had on, he's kind of fun to listen to, the US housing market. But as I had said earlier, and this guy, I think he even says it very well, I don't think you're going to see a crash in the United States because actually the United States is in a pretty good financial position right now, which is so ironic. Everybody, of course, is looking for a crash there. But it's the commodity countries. And of course, you know what's going on in Australia. Basically the same situation as Canada. And then there's that Yahoo over there in Russia. And no matter, I appreciate that there are some people on, and because we live in this world where, there's always going to be different opinions going back and forth. So I won't beat up on Putin, but you all know what I think of him. So we'll just leave it at that. There's your backdrop heading into the Fed. Some recent signals, and I'm just throwing this up here because it's kind of a good illustration. We had some daily key reversal signals. Ones that fired, and interesting enough, all of the bullish signals here just over the past week. This just happens to be one of the screeners that I run. They're all working, and interesting enough, even the General Motors bearish key reversal screener fired, and it's working. And it was interesting to see U.S. housing potential key reversal signals. They got this one got busted out, Pulte, so that doesn't even exist anymore. And this one here, interesting how they took it back up to the top of the range, but it's starting to fail again. That might actually still fire. So it's still alive, but it hasn't fired. And then, of course, our old buddy, Alan. I don't know what the hell this guy's up to now. He's completely rebranding Twitter and all that kind of crap. So he's getting ready to execute his plan. It's interesting how we had a weekly key reversal signal on this guy here recently. And that actually did fire right out of the gate first thing yesterday morning. And you can see how dead cat bounce into resistance. This yellow line was the PRZ, potential reversal zone of that harmonic AB equals CD. So this, if there was like, if the market was voting, I think the market is like collectively a voice. I think the market wanted to look for some sort of reversal off of this harmonic level. And you can see how the market is just like oscillating around it. And interesting how we had that dead cat bounce and then we just M'd out. And if you were a bearish bot kind of trader kind of person, really, I wouldn't have a problem if you had a sell on stop through about, what is that, 260 something, and looking for 220, 230. And actually, it was interesting. Looking at spread trades, we had our TRI SOF meeting last night. Everybody seems to be on vacation right now, though. So there's just one or two of us that were in the meeting last night. We did take a look tertiarily at the Tesla spreads. Didn't really see a trade that was like, oh my God, we got to do that now. And I can understand that because this is basically almost exactly middle of the range. I think our spread trades and my best trading works when we take trades at the extreme ends of ranges. So right at the middle of the range, man, 6 to 1, half dozen the other. So we're not going to do an after party here today. Wednesdays, we do, Chris and I will work away on doing YouTube videos and shorts and stuff like that. Try and, let's see if we can boost up this viewership a little bit on the YouTube channel. Be sure to look. We'll post it on the TRI PMA page. Do you even call it Twitter anymore, or is Twitter, has he completely gotten rid of that name? I'll probably always call it Twitter, no matter what the hell Alan calls it. But anyway, we have a TRI PMA, like sort of the TRI page. I think I even heard that the threads thing is not really going that well for Zuckerberg. But anyway, I suppose we'll just keep using Twitter for now until there's an alternative. But what am I trying to say here? Let's go over to the library. We have the TRI PMA page, and actually all the videos and stuff that we do, Chris does a really good job of making sure that they're put out. I have a bad habit of forgetting to retweet this kind of stuff, but Chris will probably put the tweet out there. So not a bad idea to follow this TRI PMA page. And then, of course, there's Brian and his crazy personal page, but I'm a bit of a weirdo and I rant a lot. So, but to get like the full sort of message from TRI, probably follow this TRI PMA. So we'll put out the link that the FOMC meeting is going to happen. And actually, this is a really good analogy. I think Josh even put this out earlier today, that we really want to be careful on these Fed days. So you can see the intense volatility around these Fed announcements. And this is why, if you want to get some value out of today's broadcast, because nothing I've said here is really of any relevance, don't trust the first hour following a Fed announcement. Just don't do it. And you can see exactly why. Oh, I'm a bull. No, you're not. Oh, okay. Now I'm a bear. Nope. Now I'm a bull again. Nope. Now I'm a bear. And I mean, stopwatch, 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 stopwatch. That's the hallmark of Fed days. And that's why I haven't really talked too much about levels and trading. And I guess we'll just finish off with just a quick boo of levels that I'm watching in the four different markets that I like to follow on a daily basis for the day trading plan. As I said, I had to do some business over there on Binance. We had a signal come in, so I had to act there. But for day trading purposes, I always pull up, and just do an analysis. Like I said earlier, I'm an extreme range trader. If I happen to see a trend continuation setup form, then I'll trade my bot to do that. But really, ideally, from a day trading perspective, I want to be hunting shorts against this cluster of levels up top here. And I want to be hunting longs against these clusters of lows here. So sitting right here right now, almost like trapped in the moving average sandwich, there's nothing for me to do there. So I didn't really see anything in the gold market. Crude oil market, we're up against the top ends ranges up here. You can see we got a bunch of foggy boggies. I still wouldn't be surprised if through the Fed announcement and through all of that, they run some tops here because there's a foggy that hasn't and this one hasn't. Neither of these have been hit yet. So I still think that they're floating out there and they'd like to get hit. If we go and M out and then trade down below here, then clearly that's going to change my disposition to the downside. But, again, kind of no man's landy. I like to have like a good 3 or 4 different levels all line up. And then at the same time, too, you can see there's a huge higher time frame, almost like a position trader bot setup that's just working away. It's had its move stop to scratch level hit. And if it can get up top here, maybe some little stop run through the FOMC later on this afternoon, then that will be the move stop to trailing level. And you'd start locking in profits if you did actually buy this bot level down here. So nothing for me to do there. And especially in the front of the Fed, don't want to take those kind of chances. Stock market, stock market's looking a little dangerous here. I think I had told you the breadth indicator is actually starting to look a little heavy. And starting to kind of get the sentiment. Like I said, Larry is kind of thinking the market's looking a bit toppy. So I'm leery when I see these kind of key reversals out of market darlings. And then things like Microsoft and Nvidia and stuff, they're coming off a bit from pretty extreme levels. I'm just wondering whether maybe we just ought to cool our jets. So as I showed you there a second ago, that's actually starting to look like an M. And, same thing as the crude oil market. If we actually go down through these lows, then we actually do have a double top working, and then we can start drawing fog and bombs to the downside. And I might actually start hunting shorts. So I'm not really impressed with what I see, and certainly no reason for me to be hunting trades on a like a lower time frame day trader perspective. I was interested that we did trip up a whole bunch of horizontal support and resistance on Bitcoin, trying to put in a little bit of a bottom here. We might get a nice little counter trend rally back up into fog and bombs and this recent sort of topping level here. But boy, there's a lot of technical damage that's been done to this chart. And for me to actually get bullish on a higher time frame, when we look at these charts on the weekend and stuff, we'll just finish off the video with this. I've probably been talking a little too long now, but nonetheless, our shooting star did fire, which means that the price objective should be down in this area, an equal distance of the shooting star below the shooting star. Came into 13 EMA moving average support there the other day, so not a big surprise. We found a little bit of support, but I don't think we're done. I think we got to come back against this trend line and probably also like reload zones, candle body lows for trade location, wicks and tails like to be eaten. We got a whole cluster of moving averages. So until I actually start seeing W's on this, And if we look at the daily chart, there is that railroad tracks. There's that same measured move, the downside target. We talked about the huge hole in the profile here. You can see where the 200 SMA on this daily chart is with the trend line. And again, that's back down into this. This was a really weird low. Just as I was going on vacation, that Larry Fink guy came out and said, "I want a Bitcoin ETF." And the whole damn market just ratcheted straight up. So I don't know. What I did remember seeing last FOMC meeting was Bitcoin price kind of went sideways, 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 then dumped violently following the close of the stock market that day. And then it put in an inside bar and started to climb back up. So could we get maybe like a little bit of a dump, finish this measured move, put in an inside bar, and then start climbing our way back up? Maybe. But I got to start seeing some bullish indications here. Right now, I don't have much to work with here, bullish wise. And then if we look at something like that 4-hour chart, we still technically have this bearish bot working. You can see there is that little W that came in here just overnight. Move stop to scratch. If you had taken this bot setup, then, if you wanted to just book profits on that W, I suppose that's doable. 3 high-low method would probably still have your stop at scratch. And of course, we got the big FOMC event here. And actually, what would be poetic, of course, is they do the FOMC, they break it, come back down into the bot objectives, and then turn it back up for a big rally. That's what I think I would ideally like to see. Interesting too how the 200 SMA on this 4-hour chart is basically against these highs. So we might get a nice little counter trend rally here. That wouldn't shock me. But at the same time too, this is still pointing down. It's not really pointing up right now. So anyway, there's your summary for the day. All right. Have yourselves a wonderful rest of your day. As I said, in about an hour and a half, 2 hours or so, we'll fire up the YouTube sort of hangout kind of video thing that we do through the FOMC meetings, and those are kind of fun. Listen to what Jerry has to say and how the market reacts to all of his rhetoric. All right. Have yourselves a great day. PMA for the win. All the best, and bye for now.